Welcome back to the channel, everyone. Today I want to talk about employees leaving Citadel en masse and why they're leaving. I also want to talk about why, even in November, AMC is still being manipulated. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, hedge fund Balyasny bans hiring from Ken Griffin's Citadel unit. Headhunters were asked not to recommend staff currently working there, and the exclusion also extends to those who have recently left. So what does this really mean? It means that employees that are currently working for Citadel are actually approaching headhunters and asking them to find them a new job. It doesn't matter what job, just pretty much anywhere that isn't Citadel. But why? Well, I can only imagine that the employees of Citadel are now aware of all of the shady things that are going on at Citadel, and they want to get out as soon as they can so that they don't end up in some legal trouble. So it seems that these employees are approaching headhunters and asking for a new job. But it seems like many hedge funds aren't wanting these Citadel employees. Now, believe it or not, it's actually very unusual for employees in investment banking to approach headhunters for a new job. Typically, headhunters really struggle to poach employees from top competition and top firms like Citadel. In an industry like accounting, there's tons and tons of careers up for grabs, and therefore it's fairly easy for headhunters to poach employees because there's so many jobs on offer. But obviously in investment banking, the number of people that they hire is very low in comparison, and therefore there's usually only a few jobs each year that go around compared to the tens of thousands of applicants. But now it seems like employees specifically at Citadel are really struggling to find a new job, even though the investment banking market is still so heavily active, just because of the shady goings on at Citadel. Balyasny Asset Management says it can no longer hire from hedge fund Citadel's global fixed income business, a rare halt among rivals that often poach talent from each other. The investment firm told headhunters earlier this month not to recommend potential staff from the Citadel unit. The ban extends to anyone who works there or supports the business, as well as those that worked there for the unit after May 15th but have since left. And therefore this asset management firm is not only banning current and previous employees of Citadel, but also anyone else that just works for the company or anyone that supports Citadel. And they said until further notice, we can no longer solicit or hire anyone from Citadel's global fixed income business. Clearly, it's not just us apes that are really cottoning on to all of the sketchy things that are currently going on with Citadel. Moomoo's new massive promotion gives you 5 free shares valued up to $3,500 each, and an additional share of NEO with a value of around $38, $39, $40. Now, I wanted to break down how you can get every single one of these free shares. When you open your account with Moomoo, you get your first free share valued up to $3,500. When you deposit any amount, you get your second free share, also valued up to $3,500. But if you deposit $100, then you also get that share of NEO with a value of around $40. And if you deposit $2,000, then you get the final 3 free shares valued up to $3,500 each. So that's potentially 5 free shares of Amazon that you could get just for signing up with Moomoo using the link in the description below and making your first deposit. And I also wanted to talk about why even now in November, AMC is still being manipulated. As the Kilted Trader tweeted, only 22.9% of AMC's trade yesterday was bought or sold shares that didn't derive from off-exchange volume or lit exchange short volume. You may have heard from my previous video that Charles Gasparino said the short volume on AMC was only 17%. But if that was true, why is over 70% of the day's trading volume always performed in dark pools or just off-exchange? If the shorts are covered, why would they still be manipulating AMC? Why wouldn't they just let it trade normally on the lit exchange the whole time? Why would they be pushing through such huge short volume? And why would they be pushing it all through the dark pools? And therefore it's very obvious that the shorts have not yet covered and are still out there manipulating AMC every single day. Now I also want to talk about and recap some due diligence by Jackson Hunter. 1.4% of retail shareholders owned 14% of the float as of August 8th on the Say Technologies vote count. This was obviously an absolutely groundbreaking moment when we found out that such a small portion of retail shareholders own such a massive portion of the float. And as Adam Aaron confirmed, there's 4.1 million shareholders as of June, and this was also reiterated by Adam Aaron recently in October. And therefore, even if the average number of shares held was only 75 shares, the entire float would be owned. AMC also has a negative 4.89 beta, and something I found very interesting was that on January 27th, the AMC traded volume was 10 times the existing float at that time. Don't forget, January 27th was back before AMC issued all of those new shares, bringing their total share count to over 500 million shares. Back in January, it was much, much lower, and we saw the entire float being traded over 10 times on that one day. And therefore, when AMC does have its next run up, we could potentially see 5 billion shares of AMC being traded on a single day. Now that'd obviously be over 5 times the amount of shares that were traded back in June, and therefore we could see a price rise that's over 5 times what we saw in June. Obviously, as Jackson notes, off-exchange trading has averaged 65 to 70% every single day for months now. Normal stocks are around 30 to 40%, and therefore it's clear that the shorts haven't covered because there's still so much manipulation ongoing. AMC obviously moves in synchronicity with GameStop because of the short overlap, and Thomas Petterfy said in January that GameStop could have gone to infinity, practically, if there was no PCO. And obviously PCO stands for position close only, if you didn't already know. AMC is also a global movement of people holding and buying more on a daily basis. The head of the DTCC also confirmed that no margin call defaults happened in January, and if shorts could have closed in January, they obviously would have. And because those shorts didn't close back in January, they're now significantly underwater. Shorts have taken on around $10 billion in losses from GameStop and AMC so far this year. Adam Aaron obviously said in that recent documentary with Melissa Lee that he'll never tell if he purposefully showed his shorts on the Trey's Trades interview. And therefore that's clearly a way of Adam Aaron showing there are indeed naked shorts. And Wes Christian has also said that in most abusive short cases, actual short interest is typically 50 to 150% higher than reported. And therefore, even though short interest in AMC is supposedly only 17%, it could actually be like 167% or much, much higher. And there's also many, many more on here, like media outlets telling you to sell every single day, and all the bots suggesting price targets for the AMC squeeze. And I also wanted to talk about the best way to secure your earnings after the mother of all short squeezes. Obviously, it's not financial advice, it's just some potential ideas. This poster here obviously suggested a bank account, a broker, a credit union, under the mattress, but then obviously pointed out some potential problems with insurance, such as the $250,000 FDIC insurance on banks and $500,000 SIPC insurance on brokerages. Now, obviously what you could do is split it between multiple different banks and also multiple different brokerages, and that way you could obviously kind of pass those insurance limits while still being covered. Now, alternatively, you could also put it into cryptocurrency, but we also know that crypto is very, very volatile. And the last thing you want to do after the squeeze, once you've got all of this newfound wealth, is end up losing it all. So another suggestion is to put it into real estate or physical property. I don't really want to go all Grant Cardone on you, but at the same time, physical property, like real estate, is always a good idea because it's always going to be there realistically and not disappear. Some other very important suggestions is to get yourself an actual financial advisor, an actual attorney, and also an accountant to sort out all of those taxes. While thinking about the squeeze is great and it's always fun, I think it's also very, very important to give some serious consideration to what you're going to do after the squeeze in terms of protecting that newfound wealth. Now, I also wanted to give an update on the wider market. Treasury Secretary Janet Yellen now estimates the US could reach the debt limit by December 15th. She says there are scenarios in which Treasury would be left with insufficient remaining resources to continue to finance the operations of the US government beyond this date. While the push deadline gives lawmakers some additional time to address the debt ceiling, it remains unclear how Democrats will proceed after Republican leaders, including Senate Minority Leader Mitch McConnell, have repeatedly stated they will not help with legislation to raise the limit. Republicans have now insisted that Democrats must act alone to address the debt limit through a process known as budget reconciliation. So we're now under a month away until the US potentially defaults on its debt again. This time there's going to be no help from the Republicans. I think it will be very, very interesting to see what happens over the next few weeks. And I also wanted to quickly touch on Shiba Inu as well, as I think now is an excellent buying opportunity. Shiba Inu presents discounted buying opportunity before Shiba rallies to 0.00085 again. Obviously Shiba Inu recently dropped below the double bottom point, but downside pressure is subsiding. The threshold for a bullish breakout has dropped, increasing the odds of a sustained bullish move. And FX Street say that downside risk remains, but is becoming less likely. You may remember from my last video on Shiba Inu that I said that Shiba Inu would come back and touch this line before consolidating for a bit and then blasting off to new highs around the 3.618 or the 4.23 Fibonacci lines. This basically means that Shiba Inu will soon be deleting another zero and reaching a new all-time high. FX Street say that Shiba Inu price action shows evidence that selling pressure may abate and that a new swing low has developed. If this is confirmed, then Shiba Inu is ready to test another breakout above the bear market trend line. I also think it'll be very interesting to see what happens with Shiba Inu over the next few weeks. Guys, be sure to let me know down in the comments below what you think about Citadel employees leaving en masse. And if you haven't already, be sure to sign up to Moomoo to get those 5 free shares worth up to $3,500 each. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.